I think next week is going to be the Fed meeting, right?
Is it next Wednesday already?
I think so. I think it's next Wednesday.
Uh,
It's going to be,
Next
yeah,
Wednesday is the
30 and the
first.
first. It's next
Really?
Wednesday on the first.
So, are they going to talk about interest rates on this meeting, or what are they going to talk about?
They're supposed to. They're supposed to do, well, market's expecting them to drop. They won't.
I don't think they're
Now there's
going
a
to.
question if they're going to raise interest rates. I don't think they'll do that
No,
either.
no. I think
Because I
if they
think,
do drop rates, it's going to be until the end of the year, not anytime soon.
well, here's the thing. So looking at this is like the 10-year treasury curve.
Yeah.
Kind of hard to explain, but like, okay, so treasury yield curve, this is the curve right now. And these are the short term rates. So like 1 month out, 2 months out, 3 months out, 4 months out to the 5 year, 7 year, 10 year. And this is the interest they're paying. So 2 months out is paying 5.5%. So if you
Hmm.
loan the government money for 2 months, they're going to pay you 5.5% on an annual basis.
Yeah.
If you loan it out to them for 10 years, they're going to pay you 4.7. Like, this makes no sense. This is
Absolutely not.
horrendous.
Yeah. I mean,
And so what this means is it's inverted. Like the long end, this part is lower than the front end, this part. And normally it should be the opposite. This part should be lower and this part should be higher. And when it's inverted like this, that's what this chart is showing, like this inversion right here. So when it goes below the black line, that means that the yield curve is inverted. The front end is higher than the back end.
yeah.
But if you look back, like every time it does this, what happens? It uninverts quickly, and then uninverts quickly, and then uninverts quickly. And right after that, what do you get? Recession. The gray line's a recession, and
Mm,
then a recession, and then a recession. Here it basically almost inverted, and then you get the
yeah.
2019, COVID uh, thing,
Crisis. Yeah.
recession, super small. But here we are now, like it's still inverted deep, but it's getting uninverted quickly,
Hmm.
like back here. So I'm expecting, okay, uninversion quickly, like high, and then recession, because it every single time it happens in history, and this is going back to 1980.
Mm,
So there's only two ways this can uninvert. It's either this has to come crashing down, and this stays here or goes up a little higher,
yeah.
or this goes really high and this stays right where it is. That's the only two ways it can happen. If this end goes high, interest rates go to like 10% on 10-year notes, like 6, 7, 8, 9%.
It'll be a
That's
gold mine.
devastating to the economy. That's devastating to the economy.
But it'll be a
Or,
gold mine for investors going for those long term bonds.
oh, yeah, absolutely. But then the other way is this has to come crashing down, which means this is the part that the Fed controls, the front end.
Hmm.
They have to bring it down quickly. They have to drop rates. Well, every time the Fed drops rates, historically, it's right in front of a recession. Like every time they start dropping, it's right in front of a recession. Start
Mm,
dropping, right in front of a recession. Start dropping, right in front of a recession. Here they drop, but there's no recession. But it's like going back to 1975, they all start dropping right before a recession because they have to. So
yeah.
then the question is, what do they do next week? Like, do they still raise interest rates because inflation's still high? Yada yada yada. Nah. I'm afraid when they start dropping it, that's when you're going to get the recession and the market comes crashing down, which would make sense if you
Yeah.
look at the Nasdaq or the ES on a weekly basis. That would make sense. Comes up, right, for some
Hmm.
good news or whatever, sets up negative divergence. Fed starts dropping rates. Boom, market crashes, and
And you think
everybody's expecting it for it to like skyrocket. Except, looking at these things, market never skyrockets. Every time they start dropping, you get a recession, and you get markets going to shit in a recession.
Do you think if it dumps, it goes to like the 4600 mark where your moving average is at or below it? What kind of drop is that from that high?
That's huge. I mean, down here it's like 4,800, which is previous high here
Oh, I see.
in
I see what that
2021.
line. Yeah.
But I think when it drops, it's not going to drop to here. It's going to drop to like previous lows here, like
Really?
4,100, 4,000. Yeah, maybe even lower.
It's a big
Yeah.
drop. Wow.
So
Th-
it has to
And these are
reverse some
the
of this stuff.
yeah, yeah. I think I mean I think they played it right. I think the Fed fucking played it right. I was a true believer. I was one of the bullish true believers last year towards the end of the year when everything was rallying. That because they had broadcasts that they're going to start cutting rates this year, and it
Yeah.
was all bluff. It was a bluff so that
Yep.
people didn't panic. I know, like now in hindsight, obviously, because everything unfolded, that was just a card that they played so that people wouldn't panic. But they knew they weren't going to cut rates. I mean, we know that inflation is high. Even before this pandemic and everything that has happened, there's asset inflation that was happening. We knew that, like, how is this game continuing this way? We
Yeah.
knew that, but they ignore it. But now they're addressing it to some point, to some extent. They're
Yeah.
addressing it, and they're actually addressing it. They're trying. And now, in hindsight, I'm like, that was really smart of them last year to make everybody believe that they're gonna start cutting interest rates and that things were all looking sexy and good. That well, actually, the numbers were looking terrible as far as like unemployment or like inflation is dropping for them to go back down and cutting rates. But it was all a freaking bluff so
But
that people wouldn't panic. And they're holding interest rates the way they are. And now there's no telling how long they're gonna do this for.
that's true. You don't know. I mean, they can keep going for a while, but like in recent history, every time they start dropping, like right when they start dropping rates, it's right at the beginning of recession. They
Yeah.
always drop rates right at the beginning. And they don't like that drop in interest rates, it's not a good sign. It's a bad sign. When they're
Yeah.
raising rates, it's the economy's supposed to be able to handle that. But when they start dropping, that's a bad sign. Everybody thinks market's going to skyrocket. I don't think so. I think this is like the beginning of something.
Yeah.
This is going to move, and it could still move up a little bit more. It still has room to run, but MACD's already crossing on weeklies. It's was very oversold. It's going to come back, but then once it drops, this is going to have a long way to go.
Yeah.
Possibly, possibly,
Mm.
but yeah, it's looking kind of hairy.
Yep. I
And this
mean,
interest rate thing is not. I don't know. I think next week it'll be interesting. What excuses they're going to use to not raise interest rates? Inflation's higher than expected. Well, are you doing anything because of it? Like, are you going to not raise rates? You're going to drop rates while inflation's going up? That's probably not a good idea.
I think they're just gonna continue holding it steady. I think they're gonna squeeze it, like basically I'm gonna do like an options analogy here. It's gonna be a lot of time decay coming. Basically nothing burger going nowhere.
Yeah, I
That's what
agree.
I think. It's gonna be like months of just nothing. Like data sucks, and they know they can't raise interest rates any further because everything's feeling the pain, and they can't drop rates because well the data doesn't show that they should be dropping rates. So I think it's gonna go sideways for a while, like nothing burger.
The whole market, like nothing burger for a while.
Yeah, maybe chopping here and there, but overall, like I think this year's gonna be a bust of a whole lot of nothing. I don't think it's gonna be exciting to the upside or the downside. There might be some chop in between, but nothing exciting. So you trading futures makes sense because who cares?
Yeah, yeah, exactly. You don't have to worry about the bigger picture. Just go in,
I
make
have
your
a,
trade daily
I
basis,
have
and
a
get out.
exactly day to day. I have
Mhm.
options for January. I think these are like some of my last bigger positions in my options account, and I'm not feeling very optimistic about it. The other catalyst is like, well, yeah, there's gonna be the presidential candidacy
Elections.
elections coming, so I'm like, oh, this is gonna be a perfect storm for a bullish run. They're gonna, try to show and muscle. Biden's administration is gonna try to muscle the Fed to, drop interest rates to give them that leg up or that advantage. But I don't know. I'm not feeling too optimistic for those January, and those are probably pretty much my like final biggest positions. I got smoked on this year's swing leap options, and then I got smoked last year on my leaps options, and every year I'm buying less and less of them because well I'm not making any profitable ones. So
Yeah.
we'll see. We'll see how that goes for January. But
Well, I'll tell you what I see is these are all monthlies. Obviously, this has
yeah,
been a long run. Monthlies look kind of like MACD crossed here on monthlies. You got a nice dump. Cross to the upside, you got a nice rally. It's looking like it wants to cross to the downside. You have a
yeah,
peak right here, right? So you got downward divergence here, and you have higher high here, lower high here. This is not looking good on a
no,
monthly level. Like these are monthly, so it's going to take a while, but this is not, you know, showing good signs. Big red candle on a monthly basis, even though the month's not over, but it's pretty close.
yeah,
Uh, this is looking kind of menacing to the downside.
I
And
agree.
this long term average here is it peaked, it basically hit it, went a little bit above, but it's reversing off of it again. This is looking like it's going to reverse. This is already reversing. This is not looking good for markets. And
Yeah.
given, the inflation, the interest rate situation, I think this might actually have a little dump throughout the year, and then the Fed is going to be forced to lower rates, which then brings us to TLT.
Oh yeah, I have some TLT too. Eating the big one on those now. Well, not too much actually. Well, yeah, actually the options are. I bought some actually stock of TLT, of the
I,
ATF.
I
But
know the
overall,
chart's
I'm eating the
messy as hell.
options. That's fine. The options. I'm eating the big cheese on this one.
I think
Those
it's
are
all
the
right on.
contracts. Those are the contracts I have for January. For January of next year, TLT contracts. That's like my last biggest position, I think. But
Hell yeah.
yeah, we'll see. We'll see what happens.
I think it's looking good, man. I think it's looking like it's ready.
Yeah, we'll see.
So the cool thing about Thinkorswim is like I have this so on the patterns, it says show
Yeah.
patterns. So it automatically draws these lines. Like some of them I'll draw, but some of them it automatically draws like these trend lines. And you
Okay.
see how it shows up with a red square?
Yeah. What
So
does
the
that
red
mean?
square is like the price target. So it'll tell you there's a price target, with a predicted period. They're not always right. They don't always show you everything. Like, let's see if I find one. Oh, that one was good. Like there was a wedge pattern here. It drew the
Yeah.
price target and it definitely hit it. There's another one here, longer wedge. Price target was down here, but it didn't hit it. Like it didn't go all the way down. So that one was wrong. But
Mm.
some of them are right. Like it'll hit the price pretty well. I like it.
And that's something that is just automatic from Thinkorswim, or is something that you
Yeah,
put?
you
Oh, I
click
see.
on
Show
show
patterns.
patterns
Got
up
it. Got
here.
it.
You
Got it.
click show patterns, and then it'll draw whenever it sees a pattern, like a
Yeah.
wedge or a channel. It'll draw it, and
Oh,
sometimes
that's
it'll draw
cool.
it with like a price target,
That's
expectation.
awesome. Yeah,
Yeah,
like your standard like patterns and stuff.
yeah. So like all these are all drawn by Thinkorswim. That one had a price target way up there, never hit it.
It was
It was
yeah, it
wrong.
was
So did that
wrong.
one.
Yeah.
That's why it's all messy. It looks all messy and stuff, but I just
Oh,
have
that's
those
cool.
on just to take a look at what Thinkorswim thinks.
Yeah.
It's in their name.
Yeah.
But yeah, I mean, I don't know. Everything looks a little bit too overpriced, too. And again, you have the moving average. It's coming up, getting ready to touch it on a lot of these. Nvidia,
Nvidia
Tesla's, forget it.
1500.
Oh, you just crashed Tesla. Yay. Yeah, Nvidia, 45,000.
Yeah, there we go. Nvidia 45,000.
Netflix, all these NQ basically, like the whole NASDAQ is below the moving average, is getting close, it's getting to that point. But if it rejects off there, it's going to be kind of scary.
Yeah.
Things look hideous. But we'll see. We'll see what happens. The hell do I know?